All right. Lovely. How is everybody doing? Hopefully, Liz, I know you're the host here, so maybe you can see the folks that are logging on.
I do see two attendees so far. Good
Fantastic.
afternoon. There's Sam.
So, perfect. We're going to give folks a moment to log on. I just wanted to take a few minutes of your time before we let Liz get started this afternoon to say hello. And thank you guys so much for joining us today. This is Budget Best Practices in a Struggling Economy. This session is hosted by the New York Wine and Grape Foundation, but presented by Liz Miranda of Miranda Tax and Consulting. And we're going to meet Liz again or say hi to her in just a moment. This is Val Ross. Happy to be with you today. I am the Director of Programs and Marketing here at the New York Wine and Grape Foundation. And it's great to have so many familiar names here on the line. I hope you're all doing well and staying safe and healthy these days. To that point, before we go ahead and let Liz get started, I wanted to thank you for taking the time out of your day. This is an important topic, but we understand how busy you all are at this time of year during normal circumstances. So to add in all that's going on because of the pandemic and other situations is just a testament to you guys for being here today. So we really appreciate it. As some of you might know, at the foundation right now, we're working hard to find ways to better serve you. So I just want to take a quick moment to give you just a flash update on what's happening here at the foundation. For those that aren't aware or haven't read field notes in the past couple of weeks, we're going to be rolling out a new winery membership dues and benefit structure later this month, along with a new website. So we're keeping our fingers crossed that happens in the next kind of 10 to 14 days. We're simplifying our benefits tiers. We're no longer basing our membership dues on your gallon production, but on the services we provide. So we're really looking forward to hosting more webinars like this one, both at the basic and more advanced level, as well as introducing some one-on-one coaching and maybe even some consulting opportunities for our members in the future. So maybe we'll be working with folks like Liz. So we're excited about that. So stay tuned for our press sec and to your emails for updates. If you have any kind of important or urgent questions, please do feel free to reach out to me or Sam or Jen at the foundation. And we couldn't do any of this without friends like Liz. So we want to thank her for being here with us today. She's a longtime business associate of the New York Wine and Grape Foundation. Miranda Tax and Consulting has worked with us over the years and has sponsored various events. So we're happy to have her back. She and other partners like this make our webinars possible. So a big thank you to her. We're going to go ahead and jump right into today's session with a few housekeeping items. I feel like everybody is pretty familiar with the Zoom protocol on webinar situations like this. So as you know, folks are kind of on mute. You're not able to kind of interact directly with Liz in discussion, but we'd love for you to ask questions through that Q&A tool at the bottom of your screen. Go ahead and just type your questions into it. And I always encourage people, even right now, if you know you have questions at the beginning of the session, send them now. If you want to, you can click on check send anonymously if you don't want your name attached to your question in that Q&A for any reason. And if Liz isn't able to answer your question, when it's submitted or during this session, we're going to make sure to bring it to her attention, and we'll hopefully get that answered afterwards. So we are recording this session. We'd like to send out the link as well as the PowerPoint presentation to you guys at the end, so you can go back and reference it, and we'll host it on our YouTube channel as well. And so with that, we'd really like to introduce you to our session and our speaker today. So the workshop is really geared towards giving you some tools and resources for best practices in budgeting during kind of a stressful economic time. So right now, businesses are reviewing all their expenses and revenue sources to figure out, frankly, how to stay afloat. This hands-on webinar, we will have a few surveys in here. Liz is going to help us walk through an example of a winery and vineyard budget to identify opportunities to reduce expenses and increase cash flow. And so a little bit about Liz. She's an experienced CPA who is driven by the evolving needs of her clients. Miranda Tax and Consulting serves closely held businesses and individuals in various industries with a specialization in wine and craft beverage industry. Liz received her Bachelor of Science in Accounting from the college at Brockport, SUNY in 2008, and she holds a B.A. in Music Management from Baldwin Wallace University. She spent 10 years with a regional firm, a large firm, and then 2 years at a small local firm before deciding to start her own business. She's a member of the Association of International Certified Professional Accountants, and she enjoys speaking over the past few years at B.E.V, New York. We've enjoyed those presentations as well. And she served on various not-for-profit boards, most recently the Canandaigua Wine Trail, as well as Madrigalia and Webster Theater Guild. So she's got lots of experience in this, and we're happy to have her with us today. Without further ado, I'll hand it over to Liz. Thank you.
Thank you, Val.
Sure.
Hopefully everybody can hear me. Sounds like Val can. That's promising. Really, thank you for joining us today. I appreciate you taking the time out and stopping to focus on an area that's become more stressful for everyone recently. And hopefully today, any takeaways will be useful in maybe even just a small form, but some of them may be just reminders that we're going over, things that you already knew about but hadn't remembered as a tool that you could use in really a stressful and difficult time. So Val really already covered the info about me. I've got 12 years in public accounting, and I've been working with wineries and vineyards that entire time. It's one of my great joys in the work that I do. And then last fall, I went out on my own. My contact info is here on this slide, and it's also on the last one. So any questions that we don't get to today, that you think of later, please feel free to reach out. I am happy to help in any way. Our agenda today is the first steps in creating a budget, creating new habits surrounding working with a budget, opportunities to reduce expenses. Some of them may be very obvious, and some may be, a little more off the cuff, but hopefully they're helpful. Small bit on increasing revenue. Really, the bulk of this is about how to reduce expenses, and then time for questions at the end. So, a budget, a noun, right? An estimate of income and expenditures for a set time or period is also a verb. We talk about budgeting for something. So allowing or providing a particular amount of money in a budget. And we also use it as an adjective for inexpensive. So it's one thing to budget as a verb, but it's another thing to have a budget. Without it, it's very easy to just rationalize a purchase, looking at it in a vacuum and saying we need it, or we need something that fills this vacuum, and this looks good, we're going to buy it. If you don't have a budget for maybe a printer and find this one, oh, this is $1,000, why would a $500 printer not do just fine, and how can you use those additional $500 saved towards something else? It's really reformatting your mindset to treat all of your expenditures differently. Our first poll question is, do you already have a budget? So I think I can actually launch, oh, there we go. So if you don't mind indicating if you have a budget or not. Got a couple answers, 2, 3, 4. One more maybe. We got one more. Is that everybody who's ready to vote? That's fine. There we go. Okay, so it looks like 2/5 do not have a budget. So 40%, 60%. 60% have a budget, 40% do not. So this, that's interesting because it can really go one way or the other in terms of taking the time to set it up. But those of you who don't have a budget will hopefully give you a lot of tools to get started. Those of you that do have one, hopefully will give you tools to refine it. All right, so in creating a budget, there's a couple different approaches you can take. There is monthly and quarterly, I would say, are the most common. When I say monthly, I mean you're looking at the entire year as a snapshot, but you've got monthly columns, okay? Quarterly is certainly an option. A lot of businesses do that. But in a seasonal business, I don't think a quarterly approach is granular enough to capture detail that you really need, whether it's the tourism piece, the growing season piece. There's so much that moves in large shifts through this industry. So I think a monthly approach is extremely helpful. And I start with the prior year. That's usually my best indicator. If I've never had a budget before, I use the prior entire calendar year. So in this case, even though we're midway through 2020, I'd start with 2019 as a baseline. So when I say baseline, I mean start with a budget that is a duplicate of last year's numbers. And then you have to look through and review them. Now, you don't want to just have the total for the year. You want to be able to run reports that are going to give you monthly amounts. So hopefully you've got bookkeeping software that will facilitate running those reports for you. Most of the basic ones do this, which is good. But your numbers have to be accurate. They have to be entered in a timely manner. And you really want to make sure all the details in there. So then if I've got a big chart of, actually, I'm going to skip ahead so you can see the visual example real quick. This is what I'm talking about. You know, this is an example in Excel, and you can do this in a lot of other softwares. We'll get back to it. But here's the visual chart. This is blank. But what I would do is I would use 2019 numbers to populate this chart and then start reviewing column by column. Let me go back real quick. What I do is I review the numbers, is I round off dollar amounts so that I know that I've looked at them. So if I'm looking at income across the board, it should be lower during the winter months, higher during the summer. But I round them off. If it was, you know, $9,990, I round it to 10,000. And that rounding off tells me I've looked at it, I've analyzed it, and I'll change it if I need to. Now, why would you make a change? Because, as we all know, 2020 is not much like 2019, and that happens not usually to this scale, but that happens year after year. There are differences that happen. We get different weather, we get different harvests, we get different tourism seasons. So there are a lot of things that tug and pull the numbers in different directions. So it's a thought process and it's a time commitment. This is the biggest part of it, but it's worth it. It's worth the analysis to really get to know your numbers, to see trends and see why they happen. So I talked about rounding off amounts, but then there are some expenses that maybe you see every quarter, like health insurance. You're paying your health insurance quarterly, but you want to see it spread out evenly throughout the year instead of quarterly. You want to see it every month. That's your decision. That's your preference. If you want to know when you have to come up with the cash, then leave it where the bill actually arrives and you're responsible for paying it. If you want to assign the cost to every period so you understand what your budgeted net income is for each month, then you would spread it out. So that's a preference piece for how you budget. So adjusting for oddities and unusual occurrences. So if we were using 2019 as a baseline and the 2018 harvest was very large, you had more juice than you typically do. And in early 2019, you sold bulk wine, and that resulted in higher than normal income in January of 2019 that wouldn't repeat normally. All those little things you got to think through. So again, this is the time-consuming process. When it comes to projecting income, be conservative. That's my rule of thumb. Be conservative and be specific. Now, you're going through a budget for your own protection. You're creating this to figure out where your risks are and plan to mitigate a lot of those risks. So be conservative in your income. We've certainly learned that our income was not what we expected this year. And be specific. So your income really needs to be separated by sources. If your profit and loss statement which is your income less your expenses down to net income. If you don't already have a big level of detail, which is breakdown by sources of income, then it's time for a change. It's an immediate time for a change. If you just have total sales as one line on your profit and loss, there's a lot of information that you're missing that you can pull out of budget reports and even just regular profit and loss reports. So income by sales to wholesalers, tasting room sales, direct to consumer, online, wine club, events, gift shops, cafes, the list goes on. Make sure you have that breakdown, because if you don't put that much detail in, you can't get a lot of detail out. I like to say garbage in, garbage out. If you don't put all of it in, you can't get the information out of it. So for example, if say you have merchandise sales for a little gift shop that's part of your tasting room, and it just runs through your tasting room sales, and you don't have it separated out. Well, if you're analyzing your 2020 tasting room sales compared to 2019, understand that you can't even compare, not just because of COVID, but because you can't separate them out. Lots of good reasons to have that detail in there, to take the time and put the detail in there. And if I keep looking to the side, it's because I'm looking at the question screen to see if anything pops up. So I apologize if that looks weird, but I just want to make sure I don't miss any questions. For me, a budget is about conserving cash, which is why I suggest being conservative on the income, which is for your protection. That's why we budget. So my next polling question is about which bookkeeping software. You'll see a bunch here because there's a lot out there, and there's tons more that I didn't even include. These are the ones that just I already knew of, or are on the surveys for rising in popularity. Okay, got almost everybody answered so far. And right now it's all QuickBooks. So we've got 80% using QuickBooks Desktop and 20% using QuickBooks Online. So that makes it very easy to talk through this process, which is great. Because that's the one I recommend. So, and look, I even pulled in a QuickBooks logo here to tell you, to me, this is the winner. And that's not to say that other softwares don't have the bells and whistles and can't do this, but I just know and have confidence in what QuickBooks can do. So QuickBooks has a budget feature, and it'll ask you, like, what do you want to base your budget off of? And you tell it, like, oh, last year. And it'll go, okay, great. And it sets up this budget for you, and then it lets you edit every single cell on there. And then it's a saved report, and you can run the budget to actual report anytime you want to. And to me, that's very exciting. I love live numbers. I love analyzing and comparing. And this is a really important part of this process, is being able to get these numbers like that. So yes, you could export it into an Excel, but then you'll have to manually add in the actual expenses as the year goes by. So having it live inside QuickBooks is perfectly functional, and the quickest way you can get stuff to start working. Can you start a budget mid-year? Absolutely. Yes. You can start it, and you can use the current year as the base, okay? Or you can use last year and then update it for actual. So it's just never too late. Don't be discouraged if you don't have one. It's never too late to start a budget. I don't know about you, but I think about something will occur to me that happened back in January, February, and I will feel like it is eons ago. You know, it's only August, but January and February feel very, very long time ago. And so when I look at the year to date for numbers for people that I do tax planning for, it's crazy how much of this year has been very odd, and we're still in the thick of it. So even though we've got 4.5 months to go, there's a lot we probably should be planning for that we can't predict. One quick tip on editing numbers in a budget when you go through and you're saying, oh gosh, well, we only have this much capacity in our tasting room and outdoors, so we've had less staff, so our payroll costs are lower for the summer. Well, if your payroll costs are lower, then your payroll taxes should also be decreasing. So when we're working in the visual of moving numbers around inside a budget, make sure you're paying attention to things that have relationships to each other. That's just an example. Another example is a planned purchase of new equipment and having depreciation expenses that you didn't have budgeted for last year. Now, that's also an interesting piece because that's a different approach for cash. You can finance it. You might have the debt payments. You might buy it outright. There's a lot of factors that go into how cash is handled with a large purchase, but then also any related expenses. Maybe it's a used piece of equipment and you have some repairs and maintenance that you had to do to get it up to snuff. So little things to remember that when they're related, you need to capture all those pieces. I don't see any questions yet, but if anybody's got one hovering in their heads, please feel free. All right. So in creating new habits, I just want to go into this briefly because having a budget is something that you work at consistently. You don't create it and then set it down and walk away and forget about it for a while. This is a regular thing. So it's a new habit that you need to form. And the bookkeeping needs to be as current as possible. You're going to want to be able to keep this budget up to date for changes as they occur. You might have had a plan for a new expense, and given the year that we're having, you're like, you know what, that's just going to have to wait for next year. I'll put it in the budget for next year, but then update this year's budget and remove it and say, okay, now we're not keeping that in there. And luckily, with all QuickBooks users, it's a quick run of the report. As long as the bookkeeping is up to date, your numbers in QuickBooks are up to date, then viewing the budget to actual amounts is going to tell you what's happening right now. When I say keeping bookkeeping up to date, it really should happen on a weekly basis. A lot of clients that I do bookkeeping for, I'm in it 1 to 2 times a week, sometimes more, but I'm always handling it at least one day during the week to make sure that nothing goes more than 5, 6, 7 days without being addressed. It's not going to help if you are looking backwards at your budget after it's too late to make a change or redirect. You want to catch issues as they are happening, not after. So in terms of habits, a bad habit, whoops, I see the question, sorry, 1 second. Bad habits is looking in the rearview mirror. So the question is it typical to change a budget figure to an actual figure if you know that is the final amount being spent? So if you're able to just run the budget to actual report, you'll be able to see it no matter what, that you're coming in under budget. This is more, so my comment was really about sort of a bigger plan that you've budgeted for something and you're eliminating maybe a whole project or a whole plan for expansion because the whole budget's just not working. And then you want to be able to see what the real projected picture is for the rest of the year. So if it was something substantial that you're no longer going to have involved, then I would, more like adjusting it back out because it's no longer part of a plan, not just adjusting to actual as it happens. Does that make sense? Hopefully it makes sense. but it's for the bigger pieces. You know, maybe you planned a new full-time tasting room manager because somebody had uh, you hadn't had anyone in the position for a while, but in truth you realize you don't actually want to have them on hand this year, and you want to start fresh next year. And so I would take that out of the budget. So yeah, it's a planning tool. Okay. Oh, good. So it sounds like that answered it. Thank you. So we don't want to look in the rearview mirror. We want to be on top. We don't want to let several months go by and suddenly go, oh, I didn't check my budget. Eesh. Wonder how I'm doing. This is a consistent thing. So there's good habits and bad habits. Both are important. So keep those in mind. Bookkeeping also, don't let it fall behind. I know it's something that can, some people prefer to avoid it. And it's not, whether it's an in-house person that's doing all the bookkeeping or it's contracted out, make sure it's a consistent approach. Okay, so budgeting and tax planning are different, and I just wanted to touch on that very quickly. They're not synonymous. Tax planning and strategizing is about anticipating a tax liability and minimizing it through a variety of opportunities. There may be credits you qualify for, new deductions out there, a new tax law, timing of purchases, and getting accelerated depreciation by purchasing a new piece of equipment before year end. But if it's financed, you don't have to send all the cash out the door. So that's different than budgeting. Budgeting is focusing on the cash coming in and going out to ensure that you can keep everything in line, and it's a plan for that. So just want to make sure that the process of budgeting doesn't make you think that you're also accomplishing a tax plan, because they are different. Okay, so opportunities to reduce expenses. This is the meat of it, and I'm going to spend a little bit of time on insurance policies. This is because I find insurance very mystifying, very confusing. And I don't know about you, but I usually have to review everything, look at everything, ask a lot of questions, and there's a lot of messy areas, and it's very confusing. So I actually consulted with a broker on some information that I wanted to be able to share. Workers' comp. This is a commodity. It doesn't matter how much you pay for it, you get the same coverage. So the goal is to pay the least you can and be aware of your experience modification, it's called. This leads to discounts if you have a good rating, or paying additional premiums for coverage if you've had a lot of claims and you don't have a good rating, if it's been bad. There's base rates that change every fiscal year for insurance policies. I'm going to go over those. So it's being aware of the base rate changes, and those are public knowledge, so it's not hard to find those. And then, are you in a safety group? This is like a country club. You get in the group with a good experience mod, and then the group enjoys the benefits of dividends for all being a safe group to be pulled together. It's really the least expensive way to get workers' comp. So if your broker hasn't brought that up or talked to you about it, or you're not in one, you should definitely ask. So base rates change every October 1st. So we're still on a 2019 base rate because it started in 2019, October 1, 2019, and it's going through September 30th of this year. So I don't know if you can see my mouse, but we've got class codes here. These are the typical class codes for the wine industry that we've seen. So I had the broker look up the class codes. So we've got berry or grape farm, winery and drivers, retail store, restaurant, executive officer, clerical, and outside sales. So the the workers fit into these categories. Now, you can see a 2018 base rate and a 2019 base rate. That 2019 base rate is effective for all renewals that happened October 1st, 2019 through September 30th of 2020. So anybody who renews before this September 30th gets this 2019 base rate for these classes. Well, the only one I see that went up was the retail store. Every other class, the rates went down. Look at the berry or grape farm. It went down 21.5%. Winery down 18.8%. So your rates should go down. Now your experience modification may change, and then that changes exactly how much it affects your total cost of the premiums. But if your experience modification stays the same and nothing else is different, this should be the change in your base rate. So having that knowledge going into a policy renewal is huge, because you need to get the best price for this commodity when your coverage is equal no matter how much you pay for it. I'll show you the base rates coming into the next fiscal year. This is for renewals of workers' comp policies after October 1st. And if you look at these, none of them have increased. They are all flat or decreasing. So this is something to watch for the next time you renew your insurance policy. But here's the beautiful thing. I'm playing it fast and loose with the word beautiful. The insurance industry is excited to rewrite policies right now. So don't wait. This isn't the time to wait. This is the time to have brokers review all of your policies, start with workers' comp, and ask them what your experience mod is going to be for the upcoming year, because they know there's a year in advance and you can already budget for changes. So you should know for yourself what pricing tier your workers' comp rates are in. So those are the base rates I showed you. And you should know what multiplier the carrier is putting on your rates. If you do drug tests, you should be getting a 5% drug-free credit. And here, and I know this is a lot of text, all the rest of your business insurance policies should be revisited, because underwriters are willing to write policies midterm to gain business right now. It's huge. Usually they're like, no, wait till you come up for renewal. No, not right now. They'll write them midterm and the premiums are low right now. They want to get your business. Second, you could very easily be overpaying. An independent broker, as in not the broker you're using, will usually give you a free review and ensure your coverage is adequate and that you're not paying for more than you need. Now, if you're a broker, you ask your broker to do an analysis. The question is, did they give you a copy? Usually they spend several hours on it. They produce a report with an analysis. And if they don't share it with you, maybe there's something they're trying to hide. For instance, the workers' comp rates, the change in those, the base rate is going down. If you get a renewal and your cost didn't go down and nothing else changed, that means your broker is pocketing the extra. You may say, oh, great, the price didn't go up. But guess what? It should have gone down. So having that information and being able to ask those questions is really going to be useful. There's a lot of potential for savings year after year to negotiate these policies and address them with more information. So if your broker did an analysis, get a copy. If not, you can, there's a lot of insurance members of the New York Wine and Grape Foundation. So you can speak to somebody that you haven't used and say, can you do a review of our policies? The other thing I like to do is have them look at every policy. You may not have had your general business policy updated. Do you have umbrella coverage? Do you have gaps in coverage so you need umbrella coverage? Is your liability right sized? Have there been recent change for your business? Do you have a fleet of vehicles? Did you sell an old truck and forget to have it removed from your insurance? Revisiting this and asking these questions can capture a lot of potential savings opportunities and also eliminate risk if you're low on coverage. Should you lower limits? That's a question for a broker. You can always increase your deductibles, which will decrease your premiums. That's an immediate cash savings. Using the same broker with the same company to get multi-policy discounts is always helpful. If they're spread out with different carriers, then you're not going to get a discount. The safety group that I mentioned for workers' comp ensures the lowest rate. And having one broker review all the policies, you're going to find out if you're overinsured, duplicating coverage, or you have a gap. So I know I spent a lot of time on this area, but that's because I think there's so much opportunity for really capturing any changes or potential to really make a difference and hopefully long term get your premiums lower. Hopefully I didn't go too fast through that, but what's nice is you'll have the slide deck and you send any questions afterwards. So recurring costs, a lot of different topics to go through where I'm just trying to ask questions to get you thinking, to have you think about, oh, could we do that? What would that do for us? What's the opportunity here? So, you know, one thing I've seen over the years for a payroll savings is instead of paying every 2 weeks in the classic 26 pay periods a year, I've seen companies switching to 24 pay periods twice a month. So that eliminates two pay periods, and that's 2 sets of payroll processing. I have a group with about 20 employees, and each time they process payroll, it's about $1,000. So this would save them $2,000 in a year, and sometimes that can make a huge difference. It also puts you on a monthly schedule with your payroll, and it's much easier to budget for this. Every year you get 2 months where there are 3 payrolls, and it shifts. And so that's a little unpredictable, and sometimes you can miss that when you're budgeting. So this simplifies that approach for you. For retirement plan administration, if you have a retirement plan, ask your payroll service provider if they offer administration of a retirement plan. ADP and Paychex offer it. So it may be that you may be using an independent provider and have the ability to combine services to really reduce the cost of the administration. So that's always a question to ask, to just get a quote on what they charge. I don't want to get hugely into overall payroll because this is a very big area. It's Pandora's box with the PPP and unemployment and everything. There's so much to go into, and everyone's decision to retain staff or let anyone go or change an approach is very unique to them. So I don't want to make any general statements about payroll, but I will say when it comes to hourly employees and anyone that might be working overtime, is whether or not their overtime is absolutely necessary. And if other employees that aren't working overtime, maybe you have one that hits 35 a week and one that hits 45 a week, could those 5 hours get flipped? Does that 35-hour-a-week employee have capacity to take on tasks to help the employee that's going overtime reduce their time? That's just a very basic opportunity to identify if possible, because you're paying time and a half for overtime. So those extra hours come at a much higher cost to you, which isn't in your best interest unless it's absolutely needed. Bank fees. Absolutely make sure you're reviewing all your accounts and make sure that you're not missing out on having a minimum balance requirement, which will help you avoid fees. So if you have any checking accounts that you see fees popping up that aren't related to maybe a wire transfer, double check and make sure that you're meeting the minimum requirements to avoid the fees. Sometimes it's just a balance that they want you to keep. And you can set up an automatic sweep to keep that account at that balance to avoid fees going forward. Maybe you have a small savings account and it can push and pull as needed. And if you're using multiple banks, ask if it's necessary. could you consolidate to a single bank for better overall oversight and management and potentially lower fees? Always worth a conversation to revisit that relationship. Sometimes you end up with more relationships because maybe you're always with Bank of Castile, but Lions National Bank came in with a better set of terms for financing a piece of equipment. So you ended up with a loan through Lions National Bank, and maybe they required a checking account to be opened as part of it. And then you've got multiple banks you're working with. See what you can do to consolidate, especially if you don't continue to have debt through different banks. Other recurring costs, rent. This can go two ways. If you have offsite storage space that you're using, is it space that you actually really have on site if you were better organized or had cleaned up and went through all of your supplies? Would it just be possible that you could eliminate an additional rent cost because maybe you're renting half of a barn for additional storage, and you've actually got the ability to shed some old items that don't need to hang out on site anymore and bring that back in to eliminate that extra cost? Or maybe you're paying for an entire space and you only need a smaller part of it, and can you negotiate with the landlord to say, well, I only need this square footage, I just want to pay for what I'm using? The landlord doesn't really want to lose you right now, so that does put a little power in your court to negotiate. Point of sale and merchant service costs. Point of sale vendors, if you're absolutely in love with your point of sale provider and they have great customer service, I'm not going to tell you to run the other way, but always have your merchant service fees reviewed. Any independent payment processor, just handing them your monthly statement for them to tell you how much you're paying per credit card transaction and for online sales, they can tell you if you're getting a good deal, and that doesn't force you to make a switch to get that good deal. If they come in and say you could be paying less than 3% per transaction, that can then be a tool to take back to your processor, your provider, and say, hey, I can get a better rate. Why can't you give me that rate? Then without the pain of having a switch, you can hopefully negotiate a reduction in that cost. And merchant service fees add up because with a lot of credit card transactions at 3+% each, that's a big hit. So payment processors are very competitive right now. So I highly recommend it. If you need a name of someone, I don't remember if there's a group that's an associate member of the foundation, but if not, I'm happy to connect you with one of the somebody local that handles this and can at least give you a policy review and quote. In putting together ideas for this, it's funny how granular we can get, but in a lot of ways we can amass non-essentials, and it's worth looking at just to double check, how big is that supply closet? How much stuff is dumped in there? Are we ordering stuff because we can't find things? We get these pockets of excess non-essential goods. So it's still an opportunity for tightening the belt. It may seem silly to talk about it, but you can also almost have this what we call an IT equipment depot. Extra cords, power strips, hard drives, monitors, and you have no idea what's laying around until you clean it and consolidate it all and go, oh, this is old, it's obsolete, it needs to be recycled, or I can sell this, or we can use it, and we don't need to buy new monitors for so-and-so. So really just that kind of in-house cleaning to see everything that you have on hand. You don't have to order more of something if you find that you've got it just kind of tucked away and hiding. And then the idea of the lean approach. Do you need a 2-month supply of something or a 2-year supply of something? How quickly can you get it if you're going to run out? which is a concern these days, with shipping times delayed, outbreaks in different areas of the country where maybe a FedEx distribution facility is struggling to keep churning through all the goods. Certainly something to make sure you have all the facts, but taking the leaner approach of instead of trying to get a bulk discount on items, get just what you need for the time being, to have that lean approach. And really that segues nicely because your major suppliers, chemicals, bottles, corks, other closures, you may or have one big order to get, this great bulk discount, but just have the conversation with them to see if they can offer the bulk discount with a commitment for repeat business at the same volume and not have to be one big order, so that you can spread the cost out as well. And you don't have to put all your cash into a huge order of corks when you need some of it to make payroll next week. Little things like that, having those conversations, they can go a long way. And your suppliers certainly don't want to, your vendors, they don't want to lose you as a customer. So they're much more open to negotiation right now. Debt. If your bank or lender has not already reached out to you, start now. First thing to do after this. If you have debt, the interest rates are historically low. I'm hopeful that you know this. And your monthly debt payments, which are part interest and part principal, if you have the opportunity to refinance at this time, you can lock in a historically low interest rate. You could keep your monthly payments the same, but shorten the term, the length of the loan. Or you could lower your monthly payments and then lengthen your term to preserve cash. You have options, and it's absolutely the time to talk about it with your bank. And I'm just curious, who has already been contacted by their bank or lender to talk about how low the interest rates are and start refinancing? Has anyone heard from their bank? No. Oh my gosh, these guys they're sleeping on the job. So that tells me there's conversations to be had. It's absolutely an opportunity here. So as an example, a lot of people are refinancing their mortgages right now, which is a personal budget piece. But if you are early in a 30-year mortgage, maybe you just bought a house last year and you got a great rate because interest rates were already low, and you got like 3.5% on a 30-year mortgage, which is phenomenal. Well, now you can get a 15-year mortgage at 2.15. You could save $100,000 on a $250,000 mortgage by shortening that term. Saving on the debt is huge. So please reach out to banks or lenders or mortgage brokers, whoever your contact is, and have that conversation. I'm surprised that nobody's heard from their bank or lender. Oh my gosh. Okay. About debt in continuation here, don't take on unnecessary debt. Make sure you have a cost benefit analysis. And when I say unnecessary debt, I mean new debt. Make sure you've got revenue forecasts and what the cost will be, what the cash cost will be before you take on new debt. Is it a new piece of equipment? Is it financing vineyard expansion, a new crush pad, a new bottling line? Just make sure you've gone through that thorough analysis to ensure that the potential revenue it's bringing in or other cost savings it's producing will exceed, the cash outlay, that it's going to be worth it. This just isn't the time to strain your entire cash flow system. So vendors, suppliers, kind of synonymous there, but if you are coming close to falling behind on paying your vendors, don't stonewall them. Don't ignore them. Just communicate with them directly. If a payment's going to be late, ask for an extension of time to pay before they start charging interest. And when you communicate openly with them, first of all, they're nervous too. They're nervous about getting paid. They're worried about their own business. And so if you call and say, I just need 15 more days, you know, they don't want you to go out of business either. So showing them that they can help you stay afloat by extending your terms is a very important conversation to have. And always at least ask if interest charges can be waived on late payments. It doesn't hurt to ask. So, you know, I talked about not taking on unnecessary debt. You know, unnecessary purchases in general. Always ask if a purchase is absolutely necessary at this time. You know, it may seem like an upgrade is something that's been long awaited, but right now, when we're budgeting our way through a crisis, is it absolutely necessary? Large pieces of equipment, can they be rented? Do you need it year round? And it can be an additional revenue stream for a neighbor that may be very eager to rent their equipment out. Bottling lines are a great example. Not in use the entire year, cost a pretty penny. A number of large wineries I know have rented theirs out. It's additional revenue for them and much less expensive for a small winery if they can't afford their own. So I like to talk quickly, and I know we're running a little long. How many business credit cards do you have? And not just how many accounts, but who has them? How many individuals are authorized to make purchases on behalf of the business? Consider increasing your oversight of all this business spending. You know, the owner, general manager, controller, winemaker, vineyard manager, tasting room manager, marketing, they might all have the ability to call a vendor and incur a cost on behalf of the business. And it's really tough to keep track of budget when so many people can affect it. But there are definitely ways to do it, and you can empower your staff to make purchases when they need to know and have a specific budget available to them. So make sure if they have you know, a marketing budget, make sure their part of the budget is communicated to them. You can share it just based on a department or a production center so that they can help you track the process. And this means more careful decision making. Now, for increasing revenue, this is, you know, a smaller area because I have to say there's more creativity out there than I can even process. I'm amazed at the efforts of local wineries, things that they've gone to, making their wines available, generating revenue, keeping customers connected and able to come to their sites and be engaged. So, you know, what I'm listing here is just some other ideas, but I am just curious who has actually definitely increased their tasting fees since the wineries were allowed to open, if anyone is willing to answer. Yeah. Okay, we're 50-50 right now. Anyone else? Give you another second. Okay. So we were at 50-50 for those that responded. So this was in a recent New York Wine and Grape Foundation communication discussing the change in fees. And you know, I certainly say that if you're providing an enhanced experience with more time to linger, sitting down, enjoying the view, invested in picnic tables and umbrellas, you have every right to increase your prices. So if that step hasn't been taken, I would say certainly look into it, continue considering it. Just a couple other examples for potential additional revenue. Do you have space that you're not using? We talked about reducing space used to eliminate rent paid, but do you have space available that somebody else could rent from you? So square footage in a storage facility, a barn that could house a neighbor's piece of equipment. What do you have that is space available? Do you have assets like a bottling machine that are unused for a large part of the year that you can rent out and bring in additional revenue? Old equipment that's sitting around not being used, it's been replaced with newer technology, but you haven't sold it. Maybe somebody's willing to fix it up and take it off your hands, but potential there. And whether or not you produce any waste, that's of value and can be sold. Again, just a few examples because the creativity that's already out there for working on increasing revenue streams, far exceeds my expertise. So if you can think of questions after today, please feel free to reach out. That was a lot in just an hour. So hopefully I didn't go too quickly. I really am happy to answer any questions. And again, you'll get a copy of the slide deck. My contact info is here. But thank you so much for joining us today. And hopefully this was helpful in maybe bringing up reminders, reminding you of the tools that are available to you, or giving you the confidence to really tackle the budgeting process. And that's it.
Thanks, Liz. This is Val. We'll give folks just another second to enter any questions, but I just wanted to thank you for being here with us today. I found it really useful, even for us, for the foundation, for sure. So thank you again. We appreciate your contact information. We're going to be sending this out to everybody that attended and the folks that couldn't join us here live. So you may get some other questions from other folks, so everybody can process. Thank you for the thanks that are coming in for Liz. Everybody enjoyed it. And not hearing any additional or seeing any additional questions, we'll let folks go for the day. Our thanks again, and hopefully we'll be in touch with you soon.
Thanks again.
Thanks, guys. Have a great day.